welcome to Squawk Box Europe. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade. This is the instant reaction to the developments in the Middle East, to the ongoing military operation in Iran and the consequences we've seen across Gulf states. Now, the fallout for various different sectors this morning, from oil and defence to the upside, to shipping, to what we could see to the downside on some of the cyclical stocks and transports. Initially, first up out of the gates, the stock 600 has dropped, so we've given back about 1.5% first up, but it's the sectors that are going to be fascinating today, Ben.
Yes, the U.S. President, Donald Trump, told the New York Times that Washington intends to sustain its military campaign against Iran for 4 to 5 weeks, if necessary, following the weekend's joint airstrikes with Israel, which killed Iran's supreme leader, Ayatollah Ali Khamenei. And that is the main factor that is driving markets. You can see here, in terms of the sectors, the oil and gas basket of stocks is being lifted by that rise in the oil price that we have seen. Brent crude and light crude both up between 8 to 9% in Asia, and adding to those gains, basic resources, utilities, food and beverage, although on the back foot, they are bearing up slightly more than other sectors, down, but not as much as others. Let's take a look at the regional picture. Actually, before the regional picture, let's look at the downside, and bank stocks are leading the way lower, down 3.7%. Financial services significantly lower, as well as is construction and materials and media. Let's break it down for you region by region, and this is the picture with the CAC 40 leading the way lower, down more than 2.3% in the first few minutes of trade. The FTSE in Milan and the FTSE in London also trading on the back foot. The Xetra DAX we are just waiting for a print for. Let's focus in on the oil majors. We are expecting to see them move higher. We've seen that. Look, BP and Shell both up significantly off the back of that higher oil price, given the limitations of getting oil through the region, through the Strait of Hormuz. 1 in 5 barrels of oil shipped around the world goes through that section. The risks there, and also with Iran closing the strait at points, limiting the supply. Let's take a look at what's happening with airline stocks, because they fell in Asian trade, and we are seeing that replicated given the massive disruption, thousands of flights being cancelled or diverted. Of course, Dubai airport having been hit over the weekend, but also many planes rerouting because of concerns about travelling through the region. Let's have a look at the effect on shipping stocks as well. Shipping prices expected to have gone up because of the difficulty of navigating the Middle East region, given the military situation. We're hearing that some marine insurers are either adding a risk surcharge or refusing to insure against war risk altogether. Let's have a look at another basket of stocks, defence shares. They are moved higher as a result of the military interventions that we are seeing in anticipation of greater activity in that space. Banks, let's focus in on those and the effect that it's having. Bank stocks moving lower as well in the first few minutes of trade. Well, the US, alongside a group of Middle Eastern countries, have issued a warning to Iran, condemning its drone and missile strikes and vowing self-defense.